Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. The real virus is the Fed. How could this be? This article from Seeking Alpha is going to describe a different angle, a different perspective on the virus and the markets of precious metals. So let's jump into it. We had a volatile week last week, but it provided huge opportunity for traders to take advantage of this collapse. Today, the market has met the targets for daily signals. The market tested the $1,664 area with a low of $1,627. So looking ahead, if the market closes above $1,654, it would activate sell to daily level of $1,665 and the weekly sell to level for the rest of the week. So, it may appear that COVID-19 caused the markets to collapse. A deeper analysis shows that the virus merely triggered a decline that has been building since 2008 as the central banks have increased debt to record levels around the world. However, whatever the real cause of the recent volatility, printing money or a spreading virus, the recent turmoil presents a major opportunity for traders. Without volatility, there are far fewer profits to be made. With the right tools, you can make some easy money. Which is talking about how there's so much volatility, not only in stocks, but with precious metals as well. It is opportunity, just like silver is more opportunistic than gold because silver is more volatile than gold. Silver hits higher highs and lower lows, meaning you can fill in the gaps and you have more opportunity to make money. So gold tested the $1,664 level. And if the market closes above $1,654, it will activate the sell to daily level of $1,665 and the weekly sell to level at $1,736 for the rest of the week. If we close below $1,651, which is weekly signal, it would negate this bullishness. And if we close below the $1,654 level, the daily sell one level, it would negate this bullishness. It would also activate a bearish trigger first. But first, let's look at the fundamentals, and then we can delve into deeply the technical analysis. So here's the fundamentals. In relation to Friday's collapse in the marketplace, I don't think it had anything to do with COVID-19. The virus was the straw that broke the camel's back. The panic that began took the bandage off what's really under the market, which is massive debt. And that's what I've been talking about. We've been in a recession. A recession's been looming much longer than COVID-19, right? We've been in massive debt forever. I mean, we're $24 trillion in debt right now. The dollar's lost 98% of its purchasing power, and this is only, this is the icing on the cake to really show the truth behind the scenes. So in metals, we are reacting to what central bankers will have to do. They will have to lower interest rates substantially, which puts the entire financial system into a precarious situation. It is going to be very deflationary or recessionary. The world's economies cannot afford to have this type of black swan. Japan has been trying to come out of its almost deep depression for over 10 to 15 years with extremely low rates. So where are we going to go if interest rates, when they reach zero? The real problem is that we cannot afford for interest rates to go up, nor we can afford economies to collapse. The virus has disrupted the global economy, disrupted the supply chain, and it will only get worse. And that's the thing is, people don't know to the extent of where this is going to play out. People don't understand how much more severe, or I know Poland is having new cases now. Like, people don't understand the unknown variables, and we're starting to incorporate that because this fear of we don't know what's next is what's driving the economy crazy. See, our goal is to trade profitably. The key is to measure risk and handle it so you have success. The VCPMI is an algorithm that gives you definite entry points with clear probabilities. It tells you can buy at a certain level, then stop at below the next level, which provides immediate protection. The VCPMI also identifies the level above as the targets. The mean is the first target, and then sell 1, sell 2 levels are the next targets. Developments like the COVID-19 virus or black swans do not, by definition, occur every day. Be prepared and try not to get caught up in herd mentality or emotion of the market. And that's something that I really try to talk about on this channel a lot. That herd mentality, that emotional attachment is so easy to make irrational decisions. That's where panic selling comes in. That's where impulse buying comes in. And once you can step out of yourself and look at the markets realistically, you're much more keen to be making smarter decisions. When emotions are high, when panic levels are high, it's so easy to just get caught up in all of it and make silly mistakes and silly decisions. And that can cost you a lot of money. So be careful with that. Sometimes it's good to step outside of yourself and look at things just as they are. So on the left of the chart is the daily VC PMI levels. We provide signals to our subscribers the night before the next day's trading. We had a volatile week last week. It provided huge opportunity for traders to take advantage of this collapse. The COVID-19 triggered the collapse, which is extremely bullish for precious metals. When the virus came out, we exploded to $1,691. We did not know yet then what the damage would be to the global economy. When the virus news hit the market, it met some specific targets and gave the VC PMI the opportunity to tell our subscribers to lock in profits. The VC PMI is a contrarian in that it trades to extreme levels of supply and demand. The red levels on the chart represent an area of resistance. These are pivotal points that have been activated by the VC PMI. Show extreme levels of supply and demand in red and blue. So today, the market has met its targets for the daily signals. The market tested in the $1,664 area with the $1,627 low. And when the market traded above its weekly average price of $1,608 on February 3rd, it activated a bullish trend momentum. The average price identifies the trend momentum, but the artificial intelligence recommends that if you are not long for day trading purposes, you wait for the highest probability trades. In this case, the market coming down into that blue level of the $1,564 on February 28th when it came to the weekly average of 1608. That means there's a 50-50 chance the market's going up or down. So usually you stay neutral at that point, right? Wait for a higher probability trade, either the market coming down to the extreme below or going up to the extreme above the mean. Using the VC PMI, you can entry points and exit points. So, they're talking about this artificial intelligence that can trade for you. Talking about kind of how it works, but besides the artificial intelligence trading thing, it's giving some very good information on where prices are headed, right? I mean, it's telling you where to sell at, where to buy at, and where to hold, right? There's a 50-50 chance the markets can go up or down from here. And it's telling you good information, and you can apply this to your own investing strategy. I am curious, are you investing right now? Are you buying, selling, trading, or holding? Which direction are you going, and why? Do you think prices are going to get to that $1,700 level, or do you think they're going to hit that $1,500 level next? For silver, do you think silver is going to be hitting, an $18 level or a $16 level next? And why? Do you think COVID-19 is actually going to help precious metals rise, or is the recession looming in the back burner some more of the main focus? See, it all comes full circle because the recession is also going to be helping precious metals as well. See, the COVID-19 really is the black swan. It's the straw that broke the camel's back, and showing the globe on a world scale just how much in debt we really are. So it's kind of a good thing, but then you also have to comply with all the fear and the panic and chaos and controversy that comes along with it, right? See, that's the bad part about it, because the speculation, the speculative point of view is what's dangerous, right? A rumor, a myth, a lie could send silver prices flying downwards, even if it's not even true. So that's where you got to be careful of. These markets have more speculation than ever. Before, there used to be some fundamental, and there still is some precious metals compared to stock markets. There is more fundamental value, and that's specifically due to silver having intrinsic value from a supply and demand chain where stock markets don't have that luxury. But it still is dangerous. So I'm really curious, where do you think prices are going to be headed next, and why? I think we're going to see prices more on the upside than the downside, just because of how severe things are going. And the longer this COVID-19 keeps, spreading, the worse off the economy is going to be. So the Fed is right now the virus that they're talking about, and that's just because of how much controversy and chaos is spread by cutting rates. So anyways, I thought this was a very interesting article. Looked at it from a different point of view. I think it was really cool. Hope you guys and gals enjoyed it. If you did, make sure to smash the like button. Also make sure you subscribe if you're new, because I do post daily videos. Anyways, I'm going to wrap this video up here. This was Silver Slayer. I'll see you guys soon. Peace.